Hello investors, welcome to the channel. Here, I talk about long-term investing in companies that pay a dividend. This is known as dividend growth investing. My name is Michael, and today we're going to start off with looking at how the market ended for the week and then look at stock futures. Just taking a quick look at the major indices for the week. For the S&P 500 index, it is up 3.01%. For the Nasdaq index, it is up 1.77%. And lastly, for the Dow Jones index, it is up 3.75%. The markets are up this week as more states begin to reopen, allowing people to begin normal activity outside their homes, and businesses are starting up again in order to stimulate the economy. Let's take a quick look at some news affecting the overall markets. For starters, the main culprit of the downturn in our economy has been the pandemic. Looking at the map provided to us by Johns Hopkins University, this is the data of the pandemic. As we can see here, on this map, it shows how many total confirmed cases of the COVID-19 virus that has been affecting the world. If we go over here, we can see that the amount of confirmed cases has been increasing, and that is to be expected. However, the more important thing that we have to look at is the logarithmic scale. Looking at this logarithmic scale right here, we can see that the number of cases has been slowly increasing, but at a certain point, it's beginning to flatten, which is something positive we want to see. As this curve begins to flatten, this would mean that the growth rate of the amount of cases is starting to slow down. This is good because as the growth rate slows down, we as an entire world would be able to treat the amount of people infected with the disease. And there's a lot of other things on this webpage that we can look at too. For example, here it shows us a map of how many active cases there are around the world. As we can see here, there is a high density population in the United States, South America, and in Europe. The incident rate, same thing. The fatality rate is very high in Europe, near Central America, South America, and of course parts of Asia. Overall, it seems as though the pandemic is starting to slow down just a little bit, but it may be too soon to tell. Personally, it is most likely best to continue onward with the lockdown of the entire world until we get a sense of how this pandemic plays out and whether or not a vaccine can be produced in order to protect people from this disease. Let's take a look at how the pandemic has been affecting Americans in the US. According to this article right here, more than 40 million Americans have filed for unemployment due to the pandemic. Since the pandemic has occurred, for the past 10 weeks in a row, the unemployment rate has climbed up into the millions, and as many people have speculated, the unemployment rate may continue upward of up to 20% as we go into the month of June and well into later parts of 2020. On the flip side of this, we'll take a look at the consumer sentiment. If we take a look at this graph right here, we can see that consumer sentiment has gone down since the pandemic has occurred. Overall, this graph right here shows us that the consumer sentiments have decreased down to the lower parts of approximately 71.8, down from all-time highs of about 100. Again, this is mainly due to the unemployment rate caused by the pandemic and the overall shutdown of the economy. Looking back to the Great Recession of 2008 to 2009, there was a lot more negative consumer sentiment back then than there is now. However, it is important to note that we have experienced as a nation more unemployment claims during this entire pandemic than the experiences back during the Great Recession. In fact, if you are one of the millions of people who have been affected by the pandemic and you are currently unemployed, I strongly advise you to apply for unemployment. This is the unemployment website right here for the state of California. I highly recommend for everyone who is facing unemployment to apply for the pandemic unemployment assistance. On this page, you can see whether or not you are eligible for unemployment, and most likely you will be eligible to apply for assistance. There are a lot of FAQs that many people should go over, and it's pretty easy. The application process takes anywhere between perhaps 10 to 15 minutes, and every 2 weeks you just have to certify for benefits. Generally, what this includes is that the state wants to know whether or not you are currently unemployed or have suffered a loss in wages due to cutback hours from the pandemic. And if you have, then enter in specific information relating to your situation, and more likely than not, you will receive unemployment benefits. In addition to this, there's also a program called SNAP. Now, I know a lot of people out there are hurting and suffering right now, and in order to make ends meet, it can be difficult for people to obtain food. In these cases, it is important that you seek out as many benefits as possible, and SNAP is one of those programs. SNAP is basically one of the largest federal nutrition assistance program, and it helps low-income individuals and families through a electronic benefits card. Essentially, what you do is you sign up for SNAP, and if you meet the requirements, the state government will send you a card which you can use in order to purchase food and many other household goods. To learn more, just go to this website and take a look around the About section and then apply if necessary. Generally, the process is pretty quick. It takes about 2 weeks in order to process your application, but afterwards the relief is quite instantaneous as the benefits are loaded up into a card. So check this out if you need any help with food assistance. Alright, that's pretty much all the news that I wanted to cover for this week. Let's take a look at my portfolio and see how it's comparing to the market. If we look over here, overall my portfolio is still down, but at least it's increasing slowly over time. For the past year, it is down $927, which is about 15.65%. For the past quarter, it is down $525, which is down 5.63%. For the past month, my portfolio is actually increasing. It is up by $650, which is about a return of 7.97%. For the past week, my portfolio is up $407, which is about 4.88%. And overall, for the past trading day, my portfolio is up $73, which is about a return of 0.85%. So, not too bad. We're slowly recovering, and this is a good sign. Now, let's take a look at what's been happening in this portfolio. So, here we see the dividends paid out for the past week. I earned $1.68 from CVR Energy, 13 cents from Westlake Chemical Partners, 27 cents from Paychex, 3 cents from Welltower, 6 cents from CMS Energy Corp, 28 cents from Enviva, $8.28 from Gladstone Corporation, 35 cents from LTC Properties, $1.27 from NVE Corporation, and 9 cents from Eaton Corporation. These dividends that I earned are a result of me owning shares of each company. This is money that I didn't have to put any effort into earning besides clicking a few buttons to buy shares. Essentially, I'm earning money while I sleep. This is referred to as passive income. Earnings which are derived from an enterprise like a rental property or company, which requires little to no effort in order to earn and maintain. Although these amounts may seem small, every little bit helps and will eventually snowball into something bigger through compounded interest. Alright, from here, let's take a look at how my portfolio has been performing in terms of dividends for the month. So over here on this spreadsheet, I track the monthly dividends that comes in through my portfolio. And for the month of May 2020, I earned $31 in dividends. This is essentially a 5 times increase from last year. Last year, I only earned about $6 in dividends, and this year, I earned $31. So that's really good. It shows that the compounding effect of my portfolio is working, and it is greatly increasing overall as time passes. Now, the dividends that you see here are a result of me owning shares of each company. This is money that I didn't have to put any effort into earning besides clicking a few buttons to buy shares. And this is great because essentially I'm earning money while I sleep, and through this portfolio I'm doing something called passive income. Earnings which are derived from an enterprise like a rental property or company which require little to no effort in order to earn and maintain. And although these amounts may seem small, every little bit helps and will eventually snowball into something bigger through compounded interest. So this concludes the update portion of my portfolio. Thank you so much for watching this video until the end. If you liked the video, then please give it a thumbs up as it will help the channel grow immensely. If you have any comments or questions, then leave them down in the comment section below, and I'll do my best to personally address it either in the comments or answer it in future videos. Again, I greatly appreciate everyone watching my videos, and I hope to speak to you all again very soon.